Hello and welcome. You're watching Closing Trades here on ET Now. I'm Saita, with me Sajid Mangat, and we have the management of Hitachi Energy, one of those stocks which have come out with a very strong set of numbers. I'll quickly just take you through or give you a quick glimpse of the numbers first off. With regard to FY26, it's been a very strong year. Margins are at an 8-year high, in fact, for FY26 in particular. You've seen a very decent revenue growth, in fact, 50% in terms of the revenue growth nearly. Raw material costs also largely in check. And what you're seeing as a result is that revenues have gone up by 25% YOY for FY26, 46% for Q4, 76% EBITDA increase on an absolute basis. Margins expanding on a YOY basis from 12.5% to 15.1%, and profitability up 80% on a YOY basis. You've got strong order traction also. Utilities is, of course, the key segment which continues to garner orders even for FY26. And it's been a blockbuster FY26 overall as well for Hitachi. Let's try and get a perspective on what next. Mr. N. Venu, who's the Managing Director and CEO, joining us. Mr. Venu, let me start off by trying to underline the kind of traction that you're getting. I mean, you've got a very strong order book which is shaped up. You're also doing additional CapEx which is playing out. Give us a sense of the sustainability of the kind of orders that you're seeing and you're receiving, and how is Hitachi Energy really standing out in terms of the type of products that you're able to generate versus some of the other competition, because everyone's doing very well in this space.
So first of all, thank you very much having in your show, and good afternoon, everybody.
Good afternoon. Great having you.
Yeah, as you rightly said, our set of numbers, especially Q4 and also financial year, was really very robust performance across the segments, across the businesses. And we have a strong order backlog of close to 30,000 crores, 29,000 plus, and that gives a huge revenue visibility of several quarters in that. And as you know rightly, we have been saying this consistently that we are taking a lot of proactive actions, investing ahead of the curve, and those things are really playing out. In fact, if I give you one or two examples, that we started our HVDC control and protection valve manufacturing factory in 2022 when there was no visible HVDC pipeline, because we have very strong conviction that to manage such a large complex network, you need to have this HVDC technology embedded in that. We went ahead and upfront invested in, and today that is playing out. And same is the case. The new investment we announced yesterday after our board meeting is that additional 2,000 crores CapEx, where we're going to set up a greenfield large power transformer manufacturing facility in state of Gujarat, in addition to others. And this is absolutely required not only for serving our renewable segments and also transmission segment, but also growing segments such as data centers, which are more and more data centers are gigawatt scale data centers are coming up, and that to their AI ready data centers. They consume more power. They need more of these equipments in that. And that's exactly where we are playing out and keeping the future demand right. We are investing right now in that. We are investing in our capacity. We are investing in the new technologies. We are bringing a lot of new products portfolio. We are expanding our addressable market in those growing segments, in addition to what we are serving right now.
Good afternoon, Venu. You mentioned about the order book of nearly 30,000 odd crores. Give us a sense of the new gen or new tech orders which you're coming in, which you're getting, especially with respect to data centers and renewables, which is there. How is it? What component or what proportion of your order book is that, and how do you see that market growing for yourself?
Yeah, well, I think this is a very great question. And if I talk about the data center, as you know, the data center is a low base right now in India, right? In India, data centers are less than 2 gigawatt. And the expected projection is anywhere between 13 gigawatt to 18 gigawatt, depending upon which report you're looking at it. But we see a lot of projects on the ground. Gigawatt scale projects are on the ground. For example, in Vizag area of state of Andhra Pradesh, we see a lot of projects are on ground in that. Even though right now this contributes a very low in our order backlog as a percentage, but the growth of this is 6 to 8x compared to what we are doing in that. Our addressable market in the data center, in every data hyperscale data centers, is in the range of 15% of CapEx is our addressable market in that. That's why it is a very substantial. And the data center customers require a different way of handling it, different way of specifications, and also different timelines to serve that. And we got to be agile, and we are getting geared up to serve this growing market in India.
The other thing which is capturing the market is the HVDC opportunity which is there. As T&D gets upgraded, many of them are moving towards HVDC. What is the kind of opportunity that you see there? And from the trending point of view, how big is that opportunity that you see maybe in FY 27 and 28?
Yeah. HVDC is a technology that enables interconnections and also power flow or a long distance transmission. We recently commissioned one of HVDC city in feed in Mumbai city. Even though the distance is very very limited, but this is required to ensuring that the robust infrastructure is built in the city and that. So it has a multiple applications, long distances, integration of the renewable, and also city in feed, etc. in that. So again, considering the kind of demand India is generating, for example, we already reached highest peak demand, right? And then the growth of electricity over a period of time is a it's quite from multi-dimensional things. Several things are adding into that, and that's putting a lot of opportunities and also challenges on the network standpoint. So to manage the complexity, one need to have embed this HVDC technologies into it. And I've been saying this consistently, to manage the complexity arising out of such a large scale deployment of the renewable and also electrification demand. India need to have at least minimum 2 to 3 HVDC projects per year, and that's how the system will become robust in that. And when it comes to the pipeline, we see one large HVDC project is already tendered. 6,000 megawatt of HVDC project is already tendered to our customers, and then we see at least another 2, if not 3, are in the pipeline for the next 1 to 2 years, 2 years period in that. So it's a big market. It is very technology driven market, and as you know, Hitachi Energy has pioneered in this technology, and we are by far the world leader, including in India. In India, for example, 9 out of the 18 HVDC links, including the new links, they run through our technology.
Would it be fair to say, Mr. Venu, two things? One, you would roughly have a 50% market share for HVDC in India. That's the first point. The second point I'd like to try and understand better is, on this 6,000 crore rupee order that comes through, what would typically be your share, or how much of revenue would accrue to you as part of this order win? What component of the cost is yours?
No, as I said, 6,000 megawatt of HVDC, not 6,000 rupees, 6,000 megawatt.
My apologies,
yeah.
Right.
Yeah, no problem. The 6,000 megawatt of HVDC has 2 components. One has the 2 converter stations at both the ends, and also intermediate receiving stations, but there are also transmission line. So Hitachi Energy's portion is in the 2 converter station, which is anywhere between, depending upon the transmission line length, etc., anywhere between 50 to 60% is our addressable market in that. And as I said, right now we have around 50% of market share, and our endeavor and all our actions and initiatives is to ensure that we maintain, but we know that we have to serve multiple markets, including India.
Currently, bill to book ratio is more than 3 times. Top line of 8,100 odd crores, and your order book is around 30,000 crores. What is the kind of execution capability that you are adding so that you can deliver these orders much faster?
Yeah. So the execution capabilities are twofold, and one is that we have a execution of our project management, project managers, and designers, etc. So that we have a very robust. So we have our global competency centers headquartered in Chennai, where it's a part of other 100% owned company, and we really leverage that. And they have more than 4,000 engineers not only working for India, but also working for around the world. So we have the scale, we have a global scale of engineering talent pool sitting in our own ecosystem. And the second one is our factories. Our factories, as I said, we are expanding it. We are already announced a 2,000 crores investment in October 2024. Some of those projects we have already completed, and that has come up to our factories. And then we are adding additional 2,000 crores investments for additional factories in that. So continue to invest in the growth markets so that we are able to take the bigger pie of the market share, and that's a plan, and we are playing as per our plan.
Your order backlog is also at a record high, nearly 30,000 crore. Not unexpected, but it's a near 50% increase from last year. What's the kind of order accrual you're expecting in FY27?
Yeah. No, I think we normally don't give the forward-looking statement, but what I can give you a little bit of color onto that. I think 3-4 segments are really playing out very strongly in that. The one is that our the transmission segment, which includes HVDC, but not only HVDC, but also your 800 kV and also the new 1,200 kV AC lines are coming in. So that's our biggest a market share segment. So we play a major role in that. And the second one is the renewable. Renewable is last year we have added close to 40 50 gigawatt of renewables in that, and it has a much potential for us. Entire portfolio will go into that. And the third one is a data center, which is becoming a big right now. You're at a low base, but increasing very, very rapidly at a scale and the speed. And that's where we are addressing, and we are gearing up for to that. And all these things will put us to a growth mode, and that's what we are looking at into the not only in the base orders, but also large orders. We are looking at a growth on an overall year basis.
You close FY26 with a margin of nearly 17 odd percent. With given the fact that there is a lot of geopolitical turmoil, increase in costs which is coming in, copper, aluminum, all costs are going up. Is it fair to say that you'll be able to maintain this kind of margins of 17% going into FY27, or is it there could be some pressure coming in?
I think again, which I would like to avoid a forward looking, but all I can tell is that it's quite a challenging geopolitical situation we are in, and highly elevated inflations in some parts, and also in addition to that, elevated metal prices, and also elevated freight charges. Not only elevated prices, sometimes we don't even get the shipping lines in line with our schedules, etc. In that, all this is putting tremendous pressure on our operations. And the good part is that we are able to take a lot of things proactively and ensuring that mitigate. For example, most of our portfolio do have our price variation clauses built in, and those things we pass on to our customers in that wherever the contracts have these price variation clauses in that. So like that, we are very constantly looking at opportunities. It's not easy, but I think so far we are able to hold on to that.
And Mr. Venu, give us also a sense with regard to how execution will play out over the next year or so. You've got a very healthy pipeline, therefore. Do you do maybe 20-25% growth at least in the coming year?
Absolutely. We have been going last year, for example, on a yearly basis, we have grown at least 27-28%, right? And we believe that our customers are looking forward to our products, and they are taking it, and we are able to ship it. Assuming that we do not have too much of disruptions, etc., we will definitely maintain this growth momentum, and if not, we can better this growth rate.
Venu, currently utilities account for nearly 85% of your book sector mix orders or so. Do you see that mix changing going forward as data centers and other new opportunities are coming in? Yeah. And which are the new ones, especially data centers we understand, but are you seeing some new opportunities in transportation and other sectors which are coming in?
Yeah. So I think what you talked about maybe in the current quarter, but if you really look at on an annualized basis, we have utilities for sure is a higher, but also followed by the renewable and then the industries and data center, etc. in that. So this will continue. The growth momentum of this particular sectors will continue. But in addition, the data center will definitely take take at least a low single digit if you go to the high single digit, if not double digit over a period of time. And what is also playing out for us is the two more growth levers. One is the service, and today a lot of our customers are looking for a digitalizing, productization of the service offerings in that. And that's where we will offer our new service portfolio, what we call as the HMAX, to our customers. And we have created a huge amount of order back, not huge amount of our install base in India, and we would like to leverage that install base to offer our offerings to our customers, especially on the industrial customers. And some of the new age customers, like new segment customers, such as the data centers, they are looking forward a company like Hitachi Energy, not only a product and technology supplier, but also a supplier who are taking care of the entire value, the life cycle of the assets in that. And that's where we are building our service offerings to that. Service, we said that the full potential of the service in the near term is around 2,000 crores of order book. And last year, that is just a year which we have finished, we have reached around 1,000 crores order book in the service in that. Service is going to be another major lever for our growth, and exports is going to be is the other dimensions where we are really playing there actively in
that. With regard to exports, what part of the book mix is now sitting in exports, and are the margins there better? Is export also going to be one of the areas which you focus on in a bigger fashion, or will you trim down on exports just given the domestic traction you're seeing?
No, we have been saying that from the beginning. Our primary objective is to serve our domestic market, and most of our investments, etc., also to cater to the domestic market. Having said that, we have developed a very robust, sustainable export strategy in the last 5 years, and today we have reached a very sustainable way of 25 to 30% without HVDC constraining into that. So we believe that we can sustain this growth of 25 to 30% of our overall order book going forward. And we have a very robust export strategy that in some places we will ourselves develop the markets together with the local sales and marketing. In some places, we work along with our companies over there. In some places, we supply our components to the fitter factories there in that. So it's a multiple thing. On an overall basis, export margin is definitely higher, and depending upon what strategy, the margins vary.
Given that maybe export margins are relatively better, can you give us some guidance with regard to where FY27 margins will trend? Will they be better than FY26 from a trend perspective? That's one. Second, this 4,000 crore rupees of CapEx entirely internally funded?
No, let me start with the second question of that. Out of 4,000 crores, last year we went for a QIP and we raised 2,000 crores. So the first part, which we announced investments in October 2024, is funded through our QIP, which is on track. That's what is going to happen. In the one which we announced yesterday, another 2,000 crore CapEx, I think that will be funded completely through internal accruals.
Okay. Thank you so much, Mr. Venu. I was just looking at the numbers, and you've got 4,700 crore of cash also sitting in that balance sheet of yours. So, so that should kind of take care of the CapEx. Okay. Thank you so much. This has been.
Thank you. Pleasure to be. Thank you.
This has been great. Great understanding the business, and no wonder, viewers, that this trades at what, 150 times earnings. So, so that's how it's playing out, especially in the power ecosystem. We'll step in a very short break, come back. We have Siddharth Vora of PL Asset Management who will speak with us. Let's get a sense from him as to how he's seeing Hitachi Energy at 150 times earnings. On the other side of this break, stay with us.